Romania is a beautiful Eastern European country, and it's probably most well known for its stories about Dracula, the infamous vampire. Just a little bit of a history lesson. Back in the 1400s, Romania was ruled by Prince Vlad III. And at the time, Romanians were also extremely superstitious. And a lot of stories talked about spirits haunting the lands. This is actually where the story of vampires come from. But I can confirm that we're not vampires, at least not all of us.
Welcome. This is Uncommon Sense, a CPA podcast presented by the Heshe CPA Knowledge Center. The center is an initiative of the CPA Education Foundation, the charitable arm of the chartered professional accountant profession in Alberta. For the record, this CPA podcast isn't about bean counting. Our episodes feature conversations with Alberta CPAs sharing their insights on a wide range of timely topics.
Hello, I'm Erin Schwartz, Director of the CPA Education Foundation. At this time of year, most Albertans are anxiously awaiting the arrival of spring. But there's another ritual that most of us participate in during March and April, or at least we should participate in it. Completing and filing our personal income tax returns. Yes, it's income tax season, and that means it's time for our podcast's annual tax tip episode. And so for this episode of Uncommon Sense, we're lucky to have with us an expert on personal income taxes, Antonia Stiuca, CPA. Originally from Romania, Antonia came to Canada as an international student with an eye on a career in marketing. However, her career interest shifted to accounting, and she earned an undergraduate and master's degree in the field. She then earned her CPA designation while articling at PwC. She spent several years working in the oil and gas, construction, not-for-profit, and post-secondary sectors. Today, she owns her own boutique accounting firm that specializes in tax, accounting, and consulting for small to medium-sized businesses in Alberta. With that kind of experience and expertise, Antonia is the perfect guest for us to have on this year's Tax Tips episode. Antonia will walk us through some relevant information for listeners to have before they prepare their 2024 tax returns, and she'll answer some common questions about filing taxes this year. Listeners, please note that Antonia is providing general information only, and this information is not to be construed as personal advice for you. If you have questions about your own situation, you are encouraged to seek advice from your tax specialist, who hopefully is a CPA. Also worth mentioning that we are recording this episode at the end of February of 2025. This is going to go live on forever in the internet, so presumably things may change as tax law frequently does. So welcome, Antonia.
Hello, hello. It's so nice to be here.
Glad to have you. So before we start talking taxes, can you tell us a little bit more about yourself, your journey from Romania to Canada, as well as the influences in your life that led to you embarking on this career path?
Absolutely. I came to Canada when I was 13 years old, and ever since I was a little kid, I had a real passion for education and numbers. And I actually come from a family of educators myself. My mom is a math teacher, and my dad is a physics professor. My grandma, who raised me, also really emphasized the importance of education and continuous learning. And she really honestly helped me become the person that I am today. My first taste of teaching happened when I was about 6 years old and I was in Romania. My mom actually took me to her classroom and I sat at her teacher's desk and I looked out at the students and I remember thinking to myself, this is exactly where I want to be, in front of the classroom, really sharing knowledge with all the people around me. And what happened was that once I got to Canada, that passion really stayed with me and it led me to pursue a career as a CPA, which has been absolutely the perfect way to combine my love for teaching, for numbers and innovation. And I've always seen a lot of people be very successful as CPAs, and I knew that this profession would open so many doors for me. And honestly, it truly has. And when I look back on my career, it's not just about crunching numbers. It's about helping others understand the story behind the numbers and empowering them to make smarter financial decisions. And I'm so excited to be here today to share some tips and insights and hopefully some stories of my own.
Absolutely. And we're so happy to have you. So tell me a little more about your work experience since earning your designation.
So I actually acquired my designation back in 2019, and I have worked in a wide range of industries, ranging from public practice when I worked at PwC. And at PwC, I worked in both the tax department and the assurance department, which is audits. And then I moved on to industry. I worked in oil and gas and construction as an assistant controller. And then I moved on to not-for-profits, where I was the finance manager. And then ultimately also led to my path being an educator in the post-secondary institution environment. And honestly, what I love the most about this journey is that I was able to explore so many different roles and really understand what I truly like the most for myself. And something cool that I got to do was actually be a board director for a number of companies in Alberta that provide pension and insurance plans for Albertans. And now I actually sit on a board for a charity foundation that fights against domestic violence. So very cool roles that I got to experience along the way.
Mm-hmm. And you're busy.
Yes, very busy. I wear many hats.
Yes, no kidding. So along that path, what then, I guess, triggered you to go ahead and say, I want to start my own boutique firm? And how did you come up with your firm name?
Yes, that's a very good question. Honestly, again, looking back, being a child, I always loved the idea of having a business. I actually remember selling little things to my family members and making a little bit of profit. That also was something that I was very passionate about from an early age. And you mentioned at the beginning that I wanted to pursue a career in marketing originally when I went to business school. And that is because at the time I consider myself to be a very creative person. And sometimes I still am, a little bit less nowadays. So I thought, you know what, marketing might be the best career choice for me. But as I was in business school, I quickly learned that accounting is really the language of business and that I can do a lot with this profession. So I went full force. What ended up happening was that I finished my Bachelor of Business Administration with honors in accounting at NAIT. Then I continued on to get my master's in accounting at the University of Saskatchewan, and then ultimately get my CPA designation as well. And being a business owner, what it taught me is that it allows me to apply all the concepts that I learned, not only in school, but also in the different companies that I work for. From meeting with clients and telling a story through numbers, to educating a new business owner on common tax deductions they may not even be aware of, to managing social media and growth. I get to wear so many hats on a daily basis, and I absolutely love it. Now, the name for my company that I picked is Facultas, which is a Latin word, and it means opportunity, ability, skill, and resources. And this is something that I truly resonate with because it's something that I like to do for my clients. I want to enable them to expand their opportunities in business, maximize their resources, and also build skill.
Amazing. It's almost like a mission statement or values statement as well as a name for your firm.
The name. I love that.
Yeah. It's interesting thinking back to little 6-year-old Antonia selling things to your family members and trying to make money, and maybe looking at that as, or the initial thought of, salesy type stuff, maybe marketing, but then realizing, no, maybe it's more entrepreneurial spirit and more general business, which of course then getting a CPA is such an asset for that kind of path.
Yes, absolutely.
Amazing. So is Facultas primarily a tax specialization firm, or do you offer a wider range of services?
Initially, I started Facultas as a tax compliance boutique company, but now I shifted a little bit and I offer a wider range of services. Anything from monthly financial reporting to internal process reviews, fractional CFO type of services, and actually also contracting for education initiatives, which is very exciting.
Yeah, absolutely. So let's turn now to the subject of personal taxes and tax return filing. I'll start off with a question that is probably on everyone's minds this year, and that's about the Canada Carbon Rebate, that check that most Canadians receive quarterly from the Government of Canada. Is that rebate considered taxable income? Do we need to declare it as income on our tax returns?
That's a great question. And The short answer is no. The Canada carbon rebate, is meant to be a tax-free payment given out to Canadian taxpayers. It doesn't have to be reported on your tax return. However, you do have to file a tax return in order for you to be eligible to receive it. And when it comes to the amount you get, it really varies depending on your personal situation. So I'll give you an example. For somebody living in an urban area in Alberta, so let's just say Edmonton as an example, you're able as a single individual in 2024 to receive about $900 of this carbon rebate per year in 2024 and 2025. So that's an excellent tax-free payment that is given out to all Canadian taxpayers. And no, you don't have to report it, but you do have to file your tax return in order for you to receive it.
So long as I file, I can look forward to continuing to receive that.
Exactly, yes.
Okay. If I file late, how does that impact me getting it?
So you can still receive it, but you're going to receive it late as well.
Okay. But
and you're going to miss the quarterly payments as well.
Yeah. Okay. Good to know. I better get on it. So a favorite topic for a lot of people, perhaps a least favorite topic for a lot of people, is capital gains. So there were some changes introduced last year regarding taxes on capital gains, but then those got put on hold. And to be honest, I'm not entirely sure what the situation is with that right now. So can you explain what these changes are and if they are in effect for the 2024 tax year?
You are so right about that. The proposed changes caused a lot of heated debates in the world of accounting in 2024, and it is honestly what kept us on our toes throughout the year. But before we dig into it, I just wanted to take a step back and look at what a capital gain is. When we refer to a capital gain, we refer to anything that you sell in terms of capital property at a price higher than its original cost. For most people, this happens when you sell a secondary property, such as a cottage or maybe a vacation home if you have one of those, at a profit. And some other common capital property types are rental properties. That's a common one. You may have equipment that you're selling, automobiles, in some cases, at a profit, and stocks and bonds as well. So when we think about capital gains in Canada, only 50% of that capital gain is taxable, meaning that half of that gain is included in your taxable income and taxed at your marginal rate, which really is different for everyone in Canada. So let's just take an example to put it in perspective. Let's just say, Erin, you have some stocks. Let's just say that you sold them at a profit of $10,000. Right now, you will only be taxed on $5,000 of that profit in Canada at your marginal rate, whatever tax bracket you're in.
So it essentially just adds $5,000 to my income.
Exactly, yes.
And to be clear, you said it, but I think this is something people often misunderstand. So when you say I sold them at a profit of $10,000, $10,000 is not the proceeds I received, it's the profit off of them. So
yes.
I bought these for $50,000, I sold them for $60,000.
Exactly.
And so $5,000 gets added to my income to be taxed.
Exactly right, yes. So now when we get to the fun stuff, the federal government announced that the inclusion rate, or the amount that you are taxable on, will be increased from that 50% up to 66.7% for individual taxpayers for any big capital gain that you're reporting. So for any property that you report a profit that is more than $250,000, that means that you're going to be taxed on at a 66.7%. That was at least what was proposed by the federal government.
But only on gains over $250,000.
That's right.
So my stocks with my $10,000 profit would not have been impacted.
Exactly. Yeah.
Okay.
It would be status quo for those smaller gains.
Okay. Thank you. Continue.
Yeah. So what happened was that if you had a big capital gain, so let's just say that you had a rental property and you sold it at a big profit exceeding that $250,000 threshold, then you would be taxed at a higher tax rate, which is not favorable towards you, right? And these changes were supposed to be effective June 25th, 2024. So a lot of people were concerned that they're going to be taxed on any capital gains that they have post that date in 2024. Now, what happened is that the government actually put those changes on hold until January 1st, 2026. And as of today, they have not taken any effect for the 2024 tax year. So what that means for your 2024 tax return is that any capital gain you may report, whether it's the $10,000 we talked about or whether it's more than $250,000, is still going to be taxed the same way at that 50% inclusion rate. So no changes to worry about for the current tax season that is coming up, but we might hear more news from the federal government about that.
All right. And I guess for anyone who is looking at selling some bigger secondary properties or things like that and might be at a gain, maybe this is the year to sell before any of that maybe comes into effect.
Yeah, timing is the essence in this case.
Yeah. Okay, thank you. Ever since the COVID-19 pandemic, it's become commonplace for a lot of people to work from home. I know I'm working in a hybrid kind of environment, as are many of my colleagues, yourself included. Are there still deductions available for working from home?
Yes, they are. And I'm going to refer specifically to employees. So for those individuals that receive a T4, yes, you can absolutely still deduct home office expenses. However, you do have to meet certain criteria to be able to do that. And there's 5 criteria that all have to be met in order for you to do that. And there's also a notable change in 2024 that I'm going to specify as well. So let's just go over the criteria so that everybody's aware. So in case that may apply in your situation, you know that you can claim those home office expenses. The first criteria is that your employer must require you to work from home. And this could be a verbal or written agreement, but it has to be some sort of agreement between you and your employer that you can work from home. The second criteria is that you have to pay all your home office expenses yourself with no reimbursements from your employer. So if your employer reimburses you for any type of expense that you incur for your home office expenses, then you cannot include that as part of your deduction. Number 3, you must either use your home office for more than 50% of your working hours or use it exclusively to do your work. So, for example, in the case that you don't have a secondary office to go to and you simply just work from home, then that criteria is absolutely met. But in the event that you may have an office you can go to as well, you have to be working from home more than 50% to qualify for this criteria.
So I only work from home 2 days a week. I work from the office 3 days a week. So I wouldn't meet that 50% criteria.
That's right, yeah. So that was the third criteria. Number 4 is that you have to have expenses that you're claiming that are related to your work. So when you think about home office expenses, you can think about heat, electricity, rent. In some cases, if you're renting, maintenance costs, all small repairs, that all could be claimed. And then lastly, you have to have a signed form from your employer, and that form is T2200, and it's called the Declaration of Conditions of Employment. And you typically receive this from your employer. Actually, you should receive this from your employer if you think you qualify. And what I've seen in certain cases is that the employer either gives you this form during T4 slip season. So when you get your T4, you might also get this form automatically. In some cases, the employer might not do that. So you might actually have to request it yourself if you think you qualify. So all these 5 conditions need to be met for you to be able to claim those home office expenses.
Okay. And it's not an either or, like meet one of these. It's you have to meet all of them.
That's right. Yes.
Okay.
And if you go on the CRA website, you actually have a really nice checklist. So you can just check mark each of the conditions. And if one of them is not met, then it'll give you a conclusion saying you can either do it, you can claim it as a home office expense or not. You cannot proceed with that. So
that's
CRA is real. Yeah, absolutely. I did mention there was one notable change as well with this one. So in the past, we had it a little bit easier in that we could actually use a simple method of claiming home office expenses. So instead of you keeping detailed records of all your expenses when it comes to heat, electricity, and so on, you could actually use a flat rate method if you qualified. And a lot of people qualified during the COVID era, right? Because a lot of people work from home more than 50%. So that meant they qualified. But in 2024, that is no longer an option. So you only have the option to use a detailed method of calculating your home office expenses. So really what that means is that you need to keep receipts for all your expenses, and you need to calculate your expenses in proportion to the size of your home. So let's just say that an office is 300 square feet and you have a home that's about 1,300 square feet, then you have to calculate all those expenses as a percentage of your office in relation to your home.
Okay. And then that's just making me think. You talked a little bit about the expenses that qualify, and most of them sounded like monthly recurring expenses, right? Like your internet, your heat, rent, all that. Are one-off expenses covered at all? You know, the office chair, the standing desk, those types of things?
That's a little bit of an iffy land, I'm going to say, Erin, because you're going into capital type of properties or capital assets. So you really have to think about expenses that are maintenance, repairs. So for example, if you were to repair something in your home, then that's a one-off that you can use as an expense versus a desk, which is actually an asset.
Right.
So assets are dealt with entirely different, but what I would suggest is that if you have small repairs or maintenance items, then you can absolutely deduct those. But when it comes to chairs and all of that, that's a little bit of a different type of deduction you can claim on that.
So if like the motor dies in my standing desk or whatever propels those things to move up and down and I had to repair it, that could count.
Yes.
But the original purchase,
Yeah, if that's essentially used for your home office.
yes.
Then yes, absolutely.
I'm learning so much. Thank you so much. That's incredibly useful to know. Now, unfortunately, we are out of time for this episode, but we're going to have you back for a part 2. These were a lot of really great tax tips, but I look forward to hearing some more of them from you. Thank you so much for joining us and sharing your story and all of your advice when it comes to personal tax season.
It was such a great pleasure to be here with you, Erin.
Just another reminder that Antonia has provided general information only, and this information is not to be construed as personal advice for anyone. If you have questions about your own tax situation, you are encouraged to seek advice from your CPA or other tax specialist. We'll be back on the next episode with more tips from Antonia.
The Uncommon Sense podcast is presented by the CPA Education Foundation and funded by the Heshe CPA Knowledge Center. The Knowledge Center was created through a generous donation to the CPA Education Foundation by the late Brian Heshe. Brian was a distinguished Albertan, business leader, CPA, educator, and community builder. His generosity and commitment to education underpinned his good works across Alberta throughout his lifetime. We would like to acknowledge that the CPA Education Foundation offices are situated on the traditional Treaty 6 and Treaty 7 territories and Métis Nation homeland. The Foundation acknowledges that we reside on traditional and ancestral territories of many Indigenous, First Nations, Métis, and Inuit peoples. Their histories and culture influence our community to this day. The CPA Education Foundation is committed to helping build a province where Indigenous people and their voices and experiences are heard, valued, respected, and celebrated. Technical and recording services for this podcast provided by Wolf Willow Studios in Edmonton. If you enjoyed this podcast, please be sure to like, subscribe, and tell your friends about us. If you have any comments on the podcast, write to us at cpaef@cpaalberta.ca. To learn more about the CPA Education Foundation and the Heshe CPA Knowledge Center, visit cpaalberta.ca/foundation. Thanks for listening.